Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. Today I'm going to talk about trend analysis and how you can do it in a simple and effective way. So let's just look at the trends here. I've got four charts up. S&P Spiders, SPY, the NASDAQ 100, QQQ, the Transportation Average, the ETF, IYT, and the Russell 2000 Small Caps, IWM. I look at these every single day to see what the trends are, to see if they are in alignment with each other or not at all. And you'll notice I do have a couple of moving averages on here, the 20, the 50, and the 200, all simple. Don't really need any others, but if you like the fancy variety, like the exponential, have at it. Not going to make you any money or give you any advantages. The whole thing with moving averages is being consistent, and I like keeping things simple, so I use the simple variety, and I see that they are most widely followed by institutions. So moving averages can become a self-fulfilling prophecy on a daily chart, especially the 50 and the 200, since they're so widely followed. At times, buyers will just step up blindly right at them or sell it at them when they're trending down. So it makes sense to me to use them. Now, with our trend analysis, I always teach traders to start out with a simple definition. What is the definition of an uptrend? And you're all saying higher highs and higher lows. Simple, right? So if it's so simple, why do you have all of these so-called gurus, technical analysis, I have other names I won't use here, drawing squiggly lines all over the place, trying to connect dots? What sense does that make? Because if it no longer meets the definition of an uptrend, well, I didn't want that line. Well, it just doesn't meet that definition, so it's not an uptrend. Right? Broke below the prior low. So every time it makes a new high or a higher high, you mark off the prior low. If it violates it, it's not an uptrend, and vice versa. Simple, black and white, works every single time. If you connect the dots, if you're so inclined, it'll break your line every single time. But when you see people drawing lines like this and saying, oh, when it went across here, then it became a support, and when I went through here, and then it became resistance, that is someone that has just followed the past and really doesn't know what the heck they're doing. So, as it relates to these markets, they're all in uptrends. Right? Now you'll say, well, what about the Russell? It hasn't made a new high yet. Well, it doesn't have to. Every pullback toward support is in an uptrend. The assumption is it'll make a new high. But once it makes a new high, you mark off the swing low. Now we have to define what a swing low is, of course. But for this discussion, let's just stick with the basics, higher highs and higher lows. So everything here is in an uptrend, and once we have a swing low, you mark it off. When you have a swing low after it makes a new high, you mark it off. And then, assuming it does another pullback and goes higher, you mark it off. And you always know whether it's in an uptrend or if it's moving down, whether it's in a downtrend. Now, the next step is to go to a higher time frame. And the moving averages now are meaningless for the most part here because we changed time frames. Just ignore them for now. But you'll see that my markings are there on the weekly charts. They do move over from the dailies. However, once the trend breaks in the daily time frame, the question is, does it break in the weekly time frame? And this is where a very powerful concept comes in. If it doesn't, and it moves down toward minor support or in between minor and major support on the weekly, it can set up a buy setup there that is just fantastic when it does that. Okay? So those something that I'll cover with you in a next video. Right now the markets are making new all-time highs. And as of this morning, the S&Ps are up a couple of points. The Nasdaq's down a few points. The Dow is up 50 points. And so we've got some mixed markets, and pretty much stocks are a little up and down a little bit here. Nothing of significance. We're going into the holiday next week, and probably the markets will hold up well. They'll begin to chop around as the volume lightens up, and everybody's waiting for the big Christmas present, the tax cut. Let's see what comes here. So happy trading, everyone. I hope that helps follow some of these simple rules, and you can make money in the markets using simple analysis as explained. Subscribe to the channel. More tips, more discussions about the markets and how to make money in them. Talk soon.